And to do that, I would love to invite Gary Surface, operating partner and the head of the Marketing Center of Excellence on the on-site team, to say a few words.
Yes, Christina, thank you so much. I am joined by my colleague, Emily Chisholm, who is also in the Marketing Center of Excellence. I will tell everyone here, this is one of those topics which bubbled up from our portfolio companies in a way that said, hey, there's so much knowledge within the Insight portfolio of IPO, the process of IPO, the challenges with IPO, and equally important, the fact that in some cases, the CMO is driving the IPO process, and others, they are literally barely in the room where it's all happening. And yes, I am a Hamilton fan, so that's why I was super excited to do this topic. And we are incredibly lucky and grateful to have two incredible folks who have gone through the IPO process joining us today. And so the way we've structured this is, first and foremost, we'll do some introductions. We'll go through some of the topic here with some interaction. We'll have a little question answer through that period. And then we will certainly leave time at the end here for us to have questions for this panel to be answering. So first, I'm going to start with Kara Lou Dietrich, and I'm going to let her introduce herself. But again, an amazing CMO, and just give us a little bit of your background.
Great, here I am off mute. Thanks so much, Gary, for having me. I'm really excited about this webinar because Gary has put together some really methodical materials that I wish I'd had ahead of Atlassian's IPO. I was the head of marketing for Atlassian 2 years before the IPO, through and after, and it was a great ride. And since then, I've been CMO of a social impact company. Now I advise a number of CEOs and CMOs of hypergrowth tech companies, including 1Password, Miro, and Segment. Gary, you're on mute.
Yep, welcome, and so glad to have you here. I want to introduce our second roundtable participant. It's not really a roundtable, a virtual roundtable. Whit Bach, who also is with Insight at this level as an advisor, so also a family member, but also an incredibly accomplished marketer and operator. So Whit, just a little background.
Yeah, thanks, Gary. So excited to be here and looking forward to this conversation with both you and Kara Lou, and really appreciate in advance all the great questions I hope the audience is going to ask today. So as Gary mentioned, I am an advisor with Insight, and I have a day job as the COO of HelloSign, which is a Dropbox company. I've been through 3 IPOs in my career, twice as a head of marketing, once at Documentum, which is probably a company many of you don't know because it's since been acquired by EMC when I was there, and then since acquired again, and kind of really isn't a standalone brand anymore. And then at Box, where I was the CMO as well as the head of the enterprise business. So some fun experiences to share there, and hopefully some good advice. And much like Kara Lou, I now do a lot of investing, advising, and I'm on a couple of boards, and it's just really terrific to be able to share some past experiences and lessons learned, and hopefully help people do things even better than I was able to do with the teams I was part of. So very excited to have the discussion today.
Yes, and thank you so much for making time to be with us. We're going to start with a few slides. So if you don't mind, and my dog will bark just at the appropriate time here to make this all interesting. So I want to start just with this journey, and it is a journey. I think everyone will agree that, you know, starting at the beginning of saying, look, we have a unique category, and we can talk about that being a unique category. And from that category, we can map to a TAM, a size of a market that's super exciting. And, you know, once you do that work, and we'll talk about where in the spectrum of this journey that work needs to happen, you can then go about developing an IPO marketing plan. And this is not your typical marketing plan. There are some very different components to this that most marketers would be used to. Involved in here as well as drafting the S1, which again, we will deep dive into here, and then taking it literally on the road, a roadshow to sell and what's involved with that. And then you'll get to the big day, which is awesome. But then there's the time afterwards where you're going to need to keep that momentum going as a public company. And so we look at this beautiful journey here that's mapped out and recognize it's a bit of a discontinuous journey. It's not quite this smooth little ramp on here. Just both Whit and Carrie Lou, as you sort of look at this, what jumps out at you? What do you say, gosh, like that, I remember that part?
So I think that the biggest part for us was just being really thoughtful about starting early. So I was brought in 2 years ahead of the IPO because Atlassian was a dev tools company that literally had wrench and building component imagery because it was a deep dev tools product. But there was this vision of taking the agile methodology of collaboration and bringing it to all teams and having the type of team collaboration that was really cutting edge for developer teams or applications teams to all different teams. And so we were working really hard several years before the IPO on setting that vision, getting the messaging right, proving momentum and financial sales in those new categories for us, which was customer support and business teams, building out the PR team and really telling the stories ahead of when the IPO was getting there. So I think one of the things that's tricky is when your company is growing rapidly and you're at a small emerging company, there's just so much grind to meet your number, and thinking ahead is hard, but it's really critical to be prepared to show best on stage, because it's not just the 1 or 2 month period from filing the S1 or 3 or 6 or 9, whatever it turns out to be your quiet period. It's not just that period, it's all the pieces that lead up to it that make you successful in that period.
How about you, Whit? What jumps out at you as when you see that journey in front of people?
Yeah, I think, Carrie Lou mentioning that she was hired 2 years in advance of going public, I think is a really good kind of indicator of this is a journey. It's definitely not a couple of month thing. It's a big planning thing. And I think that we'll talk a lot more obviously about the role that the CMO can play in the lead up to going public. But in addition, I think it's really key that there's planning of the story, there's planning of the processes that help you become a company of rigor that's expected of you when you're post-public. And maybe even most importantly is to develop the kind of story you want to tell the employees. Because one of the things I think people get really excited about is the IPO itself as being sort of like the end story, like the exit, as it's often called, right? The success pinnacle milestone. And in fact, it's really a financing event, albeit one to be celebrated, and it's a huge milestone. But what you don't want to do is have everybody go, okay, we're done now, and I'm leaving. Thanks, I'm going to go do it again somewhere else. Like, you really want the momentum to carry on after the IPO, and you need your employees invested in the future of being a public company too. And so part of that journey is maybe, I don't know, a little more nuanced, which hopefully we get lots more to talk about today. But that's one of the things that really stands out to me.
Well, and a funny little story on that with Ryan Carlson, who was the CMO that took Okta public, had said that the CEO of Okta said that the IPO is kind of like high school. Like, if you go to your high school graduation, you're really proud of it, but you don't want to peak in your life in high school, right?
Yeah,
and
exactly.
I mean, think of Atlassian now, right? I've made way more money since Atlassian's IPO till now than I did, in the earlier periods, because the continued growth and success is really meaningful to the company, to the impact, to all of it.
Yeah.
We did that. I'll just share a story too. It was at Box. We spent a lot of time thinking about that, of like, how can we tell a story to the employees that gets them excited, both about the event and the post event. And so we ended up, for probably 6 months prior to the IPO, we had posters all over, and in kind of every company meeting we talked about, we had a theme of the best is yet to come. And the posters showed companies that had gone public and what their financial valuation looked like post-public. And every single one of them were doing better, of course, than the day that they IPO'd. So, I think painting that future vision that, like, this is a milestone that's super awesome, but there's so much more to come that's really worth being there for.
Yeah, and I don't think anyone wants to be that IPO that falls off the cliff after
No.
the IPO. So
Definitely not.
Let's move on to the next slide here. And you know, one of the driving forces behind doing this is really to ensure that everyone understands what makes the IPO uniquely important to have a strong CMO, to have an involved CMO. And, you know, at the top of the line is, you know, who should be the best storyteller in the company should be the CMO, like obviously. And, you know, this is also the person that knows how to do category design work. And this is the person that knows how to do messaging and positioning and should be the expert on how to tell that story better sometimes than the CEO, better than the CFO. And look, it's a group of people, marketers, who are dedicated to delivering this day in and day out in the normal course of business. Why wouldn't you be leveraging that all-star team on what arguably is your most important marketing assignment?
Yeah, there was a question in the chat about, you know, what is the S1? And if you think about it, so the S1, I posted an answer there, but it is the document that gets filed with the SEC, and it's essentially what potential buyers of the stock for the IPO look at to kind of gauge the value proposition, the risk, the competitive profile, you know, what the future strategy / vision is for the company. It should paint the picture that this is a company worth investing in because the future is going to make you more money as an investor. And so, yeah, it's kind of the most important marketing piece you might ever do. Of course you need the CMO involved. It's sort of a no-brainer.
Yeah. Carrie Lou, anything you want to add here?
Well, I was just going to say, within the S1, I think we might talk about it in some of the following slides. The business section is really the one where I think marketing has the biggest chance to paint the vision and describe the category. And then there are so many components, right? The reason that it's generally the CFOs and the CEOs is because there's, you know, all the risks and all the financial dependencies that also are outlined to try to educate the potential investors. But I do agree, you know, we did a ton of brand work. We redid our visual brand look and feel. We did a bunch of visioning about our category. We had a lot of really hard, ambiguous conversations about who we are and why it mattered, and how we were going to talk about that. And so going into that process, we'd already hashed out a number of things that sometimes I think people get stuck still revising in the S1 process. And when you go into the S1 process, there's a lot of bankers in as well who are interested in helping frame the story in a way they think that the investors will want to buy it. And so I think there's this like push and pull between taking some of their advice that could be really helpful and being true to who you are and what the vision is.
Makes great sense. Let's hit the next slide. So I want to just highlight two portfolio companies that did an exceptional job defining a category and riding it to IPO. First one is Qualtrics. And, you know, when we invest in Qualtrics, we invested in a survey company. And that was designed as a TAM that was a good TAM when we made that investment. The reality is, and the discovery that Qualtrics had was when they did what we call a TAM expander strategy and moved beyond the initial TAM to this concept of the experience management category and creating, you know, the same thing, same product, surveys, but for product development, for voice of the customer, for marketing, for HR. Each of these areas represented a beefy TAM that they could show that they were uniquely able to deliver. On the Tenable example, you are in what I would consider to be a slower moving category of vulnerability management. And the idea here of creating cyber exposure and defining what cyber exposure was something Tenable did incredibly well. Didn't hurt that the CMO came from Play Bigger, which is a wonderful category creation company, but nonetheless was able to do this in what I consider to be a brilliant way of building out a true category. And both of these was critical first steps that you'll see if you hit the next slide, that these are first steps that we need to have in place before we get in this idea of the different stages of marketing. Now, it looks beautifully set up here, a pre-IPO, a quiet period, a roadshow, like as if like one day they tap and you hand the baton off to the next stage. It doesn't quite work this beautifully. There's a lot of iteration as you're moving through this, but we're going to deep dive a little bit in each of these to give you a little more understanding of what goes on during each of these periods. So let's hit the next slide. So this is a rough timeline here that shows just a little bit of how you should think about the sequencing of the activities that marketing is responsible for in the IPO path. So 12 to 18 months, and like I'd like to say that you have some control over this. Sometimes you do, and sometimes you don't, in terms of when you are told that we're ready to do IPO 6 months, let's get it done. But if you are sniffing IPO, is what I'm going to say, and I think marketers are good with spidey sense. If you are sniffing IPO, there are some things that you should certainly get ready. Even if you don't end up going public, the fact that you do this work will not be wasted. The first is about your PR cadences and your social accounts and just overall marketing activity. As we'll explain in a moment about the quiet period, you need to amp this up in advance so that your normal is at a higher level, not at whatever your current existence is, because you do not want to be stepping out of that band of what is considered normal marketing activity that you step into promoting your IPO, because our friends at the SEC tend to frown upon that. That means also you may need a different PR firm. That means you may need to invest in a public company PR firm that knows how to manage public company, because as we pointed out already, by Whit, this isn't just about the day. This is about what happens afterwards. And your PR firm is going to have to know how to navigate both the regulations as well as the continual drumbeat that is so important. And then you're going to need to make sure you have the right team in place. You can't bring everyone under the tent initially. You're going to have to operate a little bit by yourself before, and you're going to have a trusted team before that filing. And so you're going to have to choose well. And I want to ask both Carrie Lou and Whit, how did you sort of figure out who you needed to have with you? Because you were brought in and you're like, all right, who's going to be important here?
Go ahead, Carrie Lou. Oh, and you're muted. You're muted. There you go.
So you go first too. And then I said, we're so polite. So, for us, it was really about the PR because even though I ran awareness advertising for Oracle and spent like $40 to $60 million a year on advertising, I really believe that PR is what people believe even more than what you pay to say, because it seems more objective in the press. So getting a really phenomenal head of PR in place and building out the story, because when you go into the quiet period, you can't be telling the story. And then starting to do some of the advertising at the levels and spends that we planned. So, during our quiet period, one of the executives was like, hey, let's really make a splash and do more, but you couldn't make a splash if you weren't making a consistent splash. So, things like the user conference, making sure it was really big, product launches, spending a little bit more money than we might have otherwise to give ourselves more flexibility in the future was really important. That's like less about who's in the tent, and we can get to that next. But what about you in terms of? I
just want to add to that, because I think if it isn't starting to become obvious, your marketing objective during a lead up to an IPO is a little bit different, or maybe expanded is a better word, than what you would historically have been doing, which is largely about marketing to build brand reputation and attract potential buyers and things like that. And you still want to do those things, of course, but you also now have a marketing plan that's specifically about building interest in potential investors who are going to buy into the investment thesis of your company and its future. And the whole process, the S1 being the public document that represents it, but the whole process leading up is about building that interest and excitement without doing what the SEC considers hyping your stock. So, there's all these rules and regulations about what you can and cannot do. And I can't emphasize enough the point that Gary made on that timeline slide, that you need to establish a really great cadence of marketing, because once you're in the quiet period after you've filed before you go public, you can't do anything that isn't in your normal cadence, or it's considered hyping the stock. And they can actually delay your IPO, they can fine you, they can do all sorts of things. So it's really important that you know what you're doing going up to this process. And so, there was a question about, do you think you really need a third-party PR firm? If we do all our PR in-house and we don't have anybody who's been through this before, I'm like, yes, it's pretty important that you have some people who really know what they're doing, because there are lots of rules and guidelines for sure. And so part of that, to your point, Gary, is like, you also don't want leaks, because if there's a leak about you going public, that can cause all sorts of kind of abnormal behaviors and potential companies who want to buy you so that you don't go public, or your competitors make moves that you didn't anticipate. They can work to your disadvantage. So it is important that you keep the team very small. And it's not just the marketing team, it's everybody who's involved in the IPO. It tends to be a pretty small crew, at least initially, and then you add additional people as you go through the process. So clearly PR is a big one. And I think, mostly I took on the responsibility of kind of building the positioning and the messaging and the story writing and things like that, and then got the PR team involved to help us establish the right cadence of external marketing so that we would have that normal rhythm that we could maintain during the quiet period, which in our case ended up being almost a year.
Yeah, and one of the things that I've heard consistently from CMOs is, you're really doing two jobs. You're doing your regular day marketing job, and you better be delivering on your numbers, because that's super important during this period. And, on the nighttime, you're doing all the work that you need to prep for an IPO. So it's a hard little balancing act in that regard.
Right. Yeah, and on our side, we had a designer who was making things look pretty. We had, someone, originally just one person in PR, right, before you really set the timing, and me. And then I think one project manager who was working, and brand, I think our head of brand, who was working on the Net Roadshow video, which I think we'll talk about. So first you file the S1, then you create a presentation that you're going to take to all the bankers. Then in past, when you might have missed bankers, they could have watched a recording of that presentation. Now people architect pretty beautiful videos that have
cinematography comes in mind,
plus a product, a product demo, plus, some people add different things that are important to their company, like a statement of diversity from the employees or something. And then you have all these day of materials. But so we had someone who was the lead of brand, who was also working on this video and positioning materials as well. I guess then a videographer. So yeah, a really small team. And then, gradually you add in a few, but no one can know about the date, right? Because I guess to Whit's point, it was there's both legal ramifications and competitive ramifications.
Absolutely. All right, let's get back to the deck here just quickly. We're going to go through a bunch of these in a little more detail, but obviously, as with PR, there's media training for the executive team, and I'm going to dig into that in a moment. And then there's that begin drafting. Like it says 9 months. God bless you if you can have 9 months to draft your S1. My take is that it gets truncated quite a bit, and we're going to dig in the S1 in detail in a moment. Then, as Carrie Lou was mentioning, teach-ins with bankers, you're going to need a deck to give them the story. And then you finally actually get to the registration and initial press release that we're filing. And that seems like, wow, that was so great we got here. And I say this lovingly, hell, you're just beginning. Because you've got a whole lot of things to do. And I know it seems weird now, all of a sudden you're the party planner, but this is an event. Don't let anyone tell you anything else. This is an event, and it's going to, for many companies, it's going to be happening around the world. So you better understand all the complexity, who you need to involve, where it's going to be, what's going to look like in New York, but what is it going to look out in California and EMEA and APAC, and how are, I've heard stories where, a jet is chartered to basically get the CEO to hit every place in a day. And it just depends how aggressive you want to do. And then there is the IPO roadshow, which goes on before the actual IPO, where you're showing this video, and we'll talk about that in a moment. Can we just hit the next slide? So this is the during IPO period in a little bit more detail. I'm not going to go through all these pieces here, but I do want to talk about the quiet period, because the quiet period is so important to understand. Talk about a lot of doo-doo you can step in. As Whit mentioned, like, you gotta understand what the rules are. And one of the rules, which I'm just going to highlight, it's not just leading up to the IPO, it's 40 days after. So you better understand what's happening, not just the quiet period exists to IPO day, but even what you do after the IPO is governed by this. And so the way you need to think about it, and this is where a key role comes in about you being able to know what you can negotiate and what you should push. There is, if you allow legal to roll the day during the quiet period, and you can't share any new information about the company that isn't included in the S1, you might find yourself into some problems. And so you have a new product launch. Well, that's not in the S1. Can you put that out there? And again, there are a lot of gray areas. There's some black and white areas. There's a lot to navigate here. Anything you want to add, Whit and Carrie Lou, about the quiet period that could be helpful guidance for folks?
Well, one thing we talked about a little bit before we got on the live webinar was that there is such a thing as an S1 confidential filing, which I think is a really interesting vehicle for, and it's so helpful. The confidential filing means you're filing with the SEC, and essentially there are analysts that get a view toward the S1, but it's not a public document. So you haven't told the world that you're planning to go public. And what that allows you to do is to essentially get feedback from analysts and the SEC itself on what you've written in the S1 and how it comes across. And is the story compelling? And are investors going to buy it? And they may give you some advice about things to change or areas to broaden your story or different ways to talk about your TAM or whatever it may be, so that when you publicly file the S1, you've got it right. And I think that's a really kind of undervalued opportunity and tool to use to help get you prepared for that IPO. And that can also help you, as you said, Gary, if you haven't included the right things in your S1, and yet during the quiet period, you really can't reveal anything beyond what's in there, you might have just hampered yourself unintentionally. And so I think taking advantage of some of those opportunities is really key.
Excellent.
There was also a question about the teach-in with the bankers. And Gary, at Atlassian, we'd done this org deck too, which was the really deep dive into how each department worked and what we did that we shared with different bankers. Is that what you had meant by the teach-in? That is, so that's it was different than the Net Roadshow video. The Net Roadshow video was really kind of like the S1 in video, really, right? Like the highlights of the company, some of the highlights of the financials and why you should buy, whereas the org deck is more why you should trust us, how our processes work. Yep. Is that so both of those exist.
Yeah, and I want to just talk quickly about the roadshow. And every CMO is dealt a set of cards when it comes to the kind of communicator the CEO is. Some are rockstar communicators and can sell everything and anything and come from sales. Others, especially in our world, are lack of a better term, tech dudes that just kind of grew up doing tech stuff and never were meant to be on the front lines communicating in that way. What is your role as a CMO in helping shape that and get the CEO ready?
I mean, certainly we did a ton of press prep and training. I think it's difficult for tech CMOs or CEOs who don't find life-giving energy from speaking publicly, let's say, to do it all the time, to just get the reps. And so I think really speaking at conferences, doing interviews, doing prep broadcast, maybe doing some early broadcast ahead of the IPO. It's just really comfort and frequency that makes such a big difference for them. And if your CEO is not ready to do that until after the day of the IPO, it might not show as well as if they're really willing to lean into that ahead of time.
Did you do media training for the CEO and or other folks?
A lot.
Yes, lots.
Again, thinking, so I put in the chat statistics around like the median financial performance of companies that IPO'd last year, just to get a sense, right? Like if you're over 200 million in ARR or like getting close to it, maybe an IPO is out there close. But we did executive training, media training, like 18 months, 12 months, 6 months, 3 months out. Because it's like by the time you get into the quiet period IPO, it's really hard to make the time. They're on constant calls, on jets, flying around trying to meet with people. So I think you really want to get the storytelling, verbal and physical components put together before you go into the crunch time.
Yeah, I can't emphasize enough how important that media training is. Again, this is, if you go back to, this is all about building investor interest and really clearly illustrating and communicating the value proposition of the company as an investment. Then you really, and usually the roadshow is the CEO and CFO, and sometimes the CMO, depending on how busy the roadshow is, but not always. So if in fact it's a situation where the CEO and CFO are the ones on the roadshow building that interest, they have to be able to compellingly communicate what the value proposition is of the company and why the IPO is a good thing from an investor standpoint. So media training, rehearsals, dry runs, out the wazoo. I don't think you can do enough of those. Not only do we do those kind of internally with like our lawyers, for example, as we got closer and as we actually filed the S1, we started to do confidential kind of briefings and rehearsals, even internally in front of parts of the company, which I think is a really, really good thing to do, just to get practice under the belt, because you're going to go do this pitch 15, 20 times more. I mean, so we got to get it right.
I'd also work on your spokespeople, right? It doesn't have to only be the CEO. So one of the things, like, we totally blew our press out of the water with Atlassian. And one of the reasons was because we had 2 CEOs and a president. And we had, I was formerly PR, so I have like a passion, interest, and skill there. And we had this phenomenal head of PR, and we had a really senior PR person. So we had 3 rooms that were being worked constantly for broadcast, radio, print, tech print, business press. And then we had the PR team on the West Coast working at the same time as we were all working on the East Coast. So, I mean, I think really building out that machine gives you the opportunity to have more press. And, we used organic traffic to our homepage as one of our proxies for brand, because brand surveys are so expensive when you're smaller. And, the traffic to our homepage was up like 350% or something for the week of the IPO. So the volume of not just investor interest, but broad scale awareness that you can get from the event is one of the more significant PR and brand visibility things you have access to as a small company. And in fact, I'll tell you, like, it was exciting kind of leading up to it, because everyone's, maybe, and maybe it's a little bit less now because there's so many going on at the same time, but there was an anticipation, and you were like the big fish in the small pond. And then you have the IPO, and it's this, cataclysmic day of like success that you've been looking forward to. And then the next day you're kind of like a small fish in a big pond, because now, you're a public company. It's a small public company that like may or may not hit your first and second earnings calls. So, again, we talked about it before, but that like some of the practice also that I see the companies I've worked for or that I advise is that they'll even do like fake board meetings and close the book like a public company a couple times and try to do earnings calls, because nailing those first 2 earnings calls, both with your forecast and performance and with your delivery, is really important to the ongoing success of your stock.
Oh my God, that's such an important example. We did that at Box, actually. We did for 6 months prior to filing. We made sure that we could close the quarter and the financial books within 10 days post end of quarter. And we did mock earnings calls in front of the company. And we did those, I think we did 4 of them before we filed, something, 3 or 4 of them.
Oh,
so it was
a long quiet period.
yeah, exactly. Yeah. That's what you get for, it's like we filed in March, and then all of a sudden the market just tanked and we had to wait like 10 months or a year to go public. So we had plenty of time, unfortunately.
Which happens often too. I mean, I think that's why it's so critical to get your story out there, because, you have to be quiet. You can't like share too much information, but we could point people to articles that had already been written that were what we wanted to say, right. Or you could point people to pages of the S1 that were where you had the answer. And so if you can get what you want to say in the market, you can continue to communicate that through.
So I want to add one other thing, and then we're going to go in the S1. One thing that you should check with in terms with your CFO as you go into this, it looks like Carrie Lou and Whit are spending like drunken sailors going into the IPO. This is not your regular marketing budget. The expenses to do an IPO are actually capitalized. And so the marketing that goes in and all the pieces that go along with it are part of that. So you have what I'll call a different bucket of balance sheet level spending, which is different from your operating spending, which you normally would do for marketing. So worth checking out how your organization, I'm never giving accounting or tax or legal advice, but I am making sure that you do check into that. Let's hit the S1 over here quickly.
And I would just say we were really thrifty. I mean, Atlassian's core value was thrift. Like we spent less than any other marketing company because we put it all into product. That was like a core pitch. So I would just say it's about the right trade-offs.
Yes, I agree. So the S1 here, things we've already told you. First of all, highly regulated document. You're going to get a lot of what I call the office of no, between your legal advisors and your financial advisors. And, one of the things, we will say over and over, your job as a CMO is to fight for that story. Because if you allow it to be watered down, there is a huge cost to that. So you're not there to be the nice person in the room. You're there to fight hard for this story. And again, as Whit pointed out about leaks and keeping it quiet but prior to this filing, super important. And so, we look at this and put out there that, we talked about the category, mapping the category, the TAM, crafting your story, and very importantly, having data to support this. One thing we haven't spoken about, which I do want to talk about here with you, is customer references and the importance of customer references and the time it takes to get customer references, because you're going to use them in the S1, you're going to use them in your roadshow, you're going to use them throughout, and the sooner you get started with it, the better. Carrie Lou, Whit, you want to chat a little more about this?
Yeah, I was thinking about that bullet on the left block at the bottom of that slide of backup superlatives with data, because you're right. If you try to say, oh, we're the best at, or, the leader in they'll say no. The office of no will issue a can't do that. So you really do have to be able to back up these things with data. And Carolyn, when we were prepping for this, you talked a lot about the importance of customer stories and kind of data and stats around success and ROI and delivering value beforehand. And I think, we've talked a lot about kind of getting the story right, but having that story be supported with facts and data is so critical, because you can't just say we're the best. When you're talking about money and finance and bets and things like that, it just isn't going to fly. So I just wanted to emphasize that point, because I think that's something that's so important and something that you really do have to plan for pretty well in advance. You're muted, Carolyn.
And that's part of, someone was asking, who are you fighting? Generally, it's the legal team. And so funny little side story, I wrote ads when I was the head of awareness advertising at Oracle for the front page of the Wall Street Journal and the back page of the Economist and the global airports. And so we'd write all these ads. Larry Ellison had to approve every one. And he would want to make some audacious claim. And then I talked to my legal lead and he'd be like, you can't say that. And then Larry would say, I can say that. He's here to clean up after me or give me advice, not to tell me what I should do for my business, which is kind of an extreme way to say it, right? And then so I would say, like, how about a footnote? And Larry would say, like, one sentence. You have one sentence footnote to like justify it. So we would do tons of work to your point, getting the justification and trying to only make claims that could be legally justified and agree with the legal team. But then I think that there is this sensitivity, right? Like, for new CFOs that are maybe going through the IPO for the first time, they might be, want to be entirely cautious. And for some sort of like risky CEO who's like, I'm going to say it anyway, there's this space. And as a marketers, you always get caught in this space between advertising what you're doing in the best possible light and being as perfectly, advertising is over here, I think, the risky CEO, and being as perfectly safe as possible. And there's some space in there that you
yeah, but Carrie Lou, I think you make the key point here is there's black and there's white and there's everything in between. And your organization's view of risk is really what you're dealing with. Like, I just a small example with one of our portfolio companies, we put together a blog, we passed it by our legal, and they're like, well, we wouldn't put this blog out here during a quiet period. Send it over to them. They were all good with it. And their legal team blessed it. And that's who matters, not us, them. And that is part of the, the issue overall. And it's marketing in general, by the way, but it's the risk tolerance of your organization to be able to handle that.
Yeah, and getting advice from the lawyers about, hey, here's how the SEC might view this, and what's the likelihood that they may sanction you in some way if you go ahead with this. And I have an awesome say no story from the SEC from the Box IPO. So when we were getting ready to go, the founder and CEO, Aaron Levy, who, if you follow him on Twitter, he's hilarious, he's amazing. He likes to be very bold and big. And so he wanted to be the first ever to tweet a link to the S1. Which, first of all, there's this weird SEC rule that I don't really understand. I guess it falls in the category of potentially hyping the stock, that you can't actually send a link to your S1 to anyone. You can't put it in anything. People have to search for it and go find it. It's so odd. So anyway, Aaron wanted to do this very bold move of like posting a link to the S1, which is already verboten, right? And so the SEC, fully not understanding Twitter, obviously, came back and said, we'll let you post a link, but only if you can guarantee that no one would ever retweet it. We were kind of like, do you know how Twitter works? Needless to say, we didn't do it, but it was actually kind of a groundbreaking moment to get them to say yes to anything.
Isn't that
hilarious?
No retweet.
Yeah, sure, no retweet. Yeah, definitely.
Yes, it was a partial yes. So yeah, I mean, there's lots of like business-oriented legal teams, and there's lots of cautious legal teams, and you're going to have in-house legal, and you're going to have external legal counsel that's helping you through this. And so, I think this isn't the word that I would normally use, but I think empathy is really important through this process because everyone's just trying to do their best. Everyone's under stress and no one wants to be the reason this whole thing blows up and goes sideways. So I think there's a lot of space to navigate. Back to your original question, Gary, customer reference. Okay, the two things that I got ready early that worked out right were the PR team and the customer references. So customer references, you're going to need dozens of them. You're going to need names for the S1. You're going to need stories. You're going to need stories in different verticals. If you're telling a story like Atlassian was around the expansion of your product beyond a product to a suite or a platform, you're going to need to talk about people using the whole platform or the different components. You might need to have customer stories about the different audiences. If, in our case, it was business, support, and developers. You might need them about different industries. If you're saying, hey, our like amazing legal AI is going to tackle problems in manufacturing and healthcare as well. You might need global stories that show how big your global footprint is and growing. So first, there's this whole litany of studies that demonstrate the effectiveness of your products and why people should have confidence in buying your stock. Second, you're going to need different kinds of materials. So you're going to need these names and stories. You're also going to need videos. So we had put together, customer highlight videos like you have at the opening of your user conferences. And we ended up using those in our S1 in a little bit of a shorter duration. And you're going to need really close relationships because you have to call customers and get their approval to use them for something that you can't tell them what it is. And there's kind of this like wink, wink, nod, nod, like we need to use you for something that we can't tell you, but it's a thing coming up.
It's a big thing. It's a really big thing.
A
right?
big thing.
There's, you know, anticipation anyway. And I think many of us have encountered this in fundraising, right? You know, if you have a fundraise coming up, people kind of know it could be coming up and you're kind of winking. But one of the things that a CMO had mentioned to me, the CMO of Datadog, said he wished that he'd changed his approval form for all of his customer references or in his standard contract to say, you know, we can use your logo and name and story for marketing materials and financial materials, because he felt like if he'd added
that is a power tip there.
And the financial materials, you know, the logos and names could apply to these different kinds of materials. So that the tip of farther ahead is these customers.
One.
Yeah, that's awesome. You want to bring back the deck here quickly? Let's pop to the next page here, and we're not going to spend much time here, but you know, as I've told both Whit and Carrie Lou, one of the things that I do is I actually read through S1s to see who's doing a good job and who's not. And you can see like the language in the S1 needs to be bold, and you can see like democratizing the power of software, change the way people work, pioneering a new category of software. These are big words and they have to be backed up. And this is from Monday.com, which just went public within the last week, and, you know, very successful IPO and, you know, a great story. Just taking another quick look here, you can look at Snowflake, which was another very successful IPO. Even though it's having some issues currently, the numbers are still, I think I read something like 57% ahead of like the forward earnings, like by multiple levels. So still a great IPO, but like, look, they're solving a decades old problem. They're being innovative. They have a point of view. We believe in the data connected world, and they're just starting with a minor sort of goal here. We're reimagining data management, like just keeping it small. They're just going to reimagine the whole damn thing. And, you know, again, super great approach here, and good to look at other examples of successful IPOs and the language they use. Let's hit the next slide here. Making this really a day to remember is worth noting. You know, as someone said to me, you know, when I spoke to them, he said, you only do this once as a company. You may do it multiple times in your career, but only once as a company. And, you know, you can't go back and have a redo. So you should be bold. You should think beyond the you know, the simple event. And it is worth noting, you have a choice as a firm of listing on exchanges. And that choice is important because there are a lot of marketing implications to that. Carrie Lou Whit, can you talk a little bit about what the difference is in your mind between NASDAQ and New York Stock Exchange, and how do you help the firm make that choice?
And are our IPOs on the next slide still? Because I think we had picked different. Yeah, right. So we picked the NASDAQ and Box had picked the New York Stock Exchange. So yeah, Whit, do you want to go first?
Sure. I mean, and these things change over time. So I don't think there's a pat answer. It will depend on you, your needs, and what NASDAQ and NYSE and so forth are doing at the time. But a lot of it is the marketing package they offer. So these guys, when you IPO with them, you know, obviously they're making some money on the transaction. They in turn will invest back in you and offer you a pretty wide array of marketing activities to get your brand well known, particularly with the financial community, because that's who they communicate with the most. And that can actually be very helpful in setting you up for future success and generating the right level of interest and all those things. And so for us, it was a large kind of evaluation of what each of these two companies offered us from a marketing package point of view. And therefore, given kind of fees involved and what we got and everything else, kind of what we thought would be the most advantageous and beneficial for the business. And at the time we went, which was in January 2015, we felt like NYSE was offering us a better package. So just wanted to kind of lay that out there. I'm sure you can add more depth and perspective here, Carrie Lou, on what led you guys to choose NASDAQ.
For us, the marketing packages kind of seemed fairly similar. And, you know, Snowflake had picked the New York Stock Exchange because they're a big customer. So I think that there's like many reasons, but they're both good options. And I think Denise at Snowflake has done the New York Stock Exchange for one that she's done and the NASDAQ for another. But I do think like maximizing it once you have it, whatever they give you as the marketing plan is just the beginning of whatever negotiation you want to do to customize it, because there's like money and opportunity set aside. So like with the NASDAQ, they have, since you didn't have it when we were IPOing, they were just building it, but they have a West Coast really fancy office in San Francisco where you can host customers. And some of the marketing value they provide you day of is like within the NASDAQ, there's a broadcast studio right upstairs. So, you know, all your broadcast interviews can happen in the building. It's really convenient. You can have another bell ringing a year later and launch a big product or have customers there. We actually donated ours to Pledge 1% because part of our IPO was also thinking about our social good. The founder of Atlassian and I founded Pledge 1%, which is a nonprofit founded also with Salesforce to help companies pledge 1% of equity, product, profit, or employee time to charity. So when we IPO'd, the 1% of equity we had donated to charity was now worth millions of dollars and funded our foundation. And we ended up donating some of our marketing material, our activities of the NASDAQ to Pledge 1% to continue to build momentum in that group of CEOs giving and thinking about their values and community.
Super cool. And not for nothing. And I know everyone's going to think I'm totally judgmental about this, but like the box picture there is the same picture they did in 1985 with whatever company. It looks the same. It feels the same. And it's not, that's not meant as a negative to you, but like, look at Atlassian, and it feels like modern and hip and like, you know, a different sort of vibe. And I'm not saying one is right or wrong. I'm saying different vibe. And so that's also part of the equation as you start thinking through this. Next slide here. There's a bunch of things here, but I want to, and you'll have access to this deck. I want to ask just one question here to this group, which is like, you know, you get to do this, like I said, one time. It's a specialty. What was like one thing you did to like savor the day that you just said, you know, I want to remember this? What was it?
Well, for us, oh man, I mean, there is something really exhilarating about being on that podium stage, whatever you want to call it. And we actually went out afterwards to a very special lunch with, you know, a few of us that had worked so hard on the lead up to the IPO. And we went to a special place in New York that just, you know, I still remember sitting around that table and the lunch we had, the bottles of champagne that were consumed. So there was a personal kind of cherishing moment that you want to do, but then there's also the team things. And I think that's obviously even more important. And so we made sure that there was, for all the people that were in New York, specifically for the event and their plus ones, we did an event with the bankers and the lawyers, as you typically would do. That was a special celebration. But what we really focused on was, what do we do for the team, the whole company, making everyone feel part of the process. And so we had, starting at, you know, I think it was at 5:30 in the morning, because it's a West Coast office. And of course, the IPO is happening on the East Coast. We had, you know, all sorts of treats brought in and decorations, and there were entertainers all day. And we gave everybody all day unlimited celebratory moments and bringing in special treats and performers and things. And we had a live feed after the IPO with the executive team to kind of talk to the team and answer questions and things like that. And it was a very special way to celebrate. I think we really did a good job of making everyone feel part of the process and part of that celebratory moment and milestone.
We have 2 minutes left. So I want to tell that same story, except I guess I'm going to just turn left for 1 second, because I think I was really intimidated to do the IPO, right? I've never done an IPO before. It's so visible. There's so much pressure. You know, it's quiet by myself because I can't let anyone in. So like the biggest headache was trying to get the t-shirt ordering and like jacket ordering right, because we can only order a couple and it was exclusive, but no one could know. And that, right? So, but what I found through all of it was that it was kind of like, I don't know, the Dorothy and the Wizard of Oz, you like search the world and come back to your backyard. The IPO is very much like almost every other massive launch you've ever done. It's like a product launch. It feels very much similar in some ways, right? Like, do you have the right messaging and right differentiation? Have you targeted it towards your audience? Like, have you thought about the components, the like presentation, the webinar, the video, the email campaign, the like follow-up emails, the social media aspect, right? It's very much campaign planning. There's like a day of, there's an event there, there's an event at home, there's the follow-up afterwards to say like, here's how it went, like, let's go forward and do more. Now this gives us more opportunity. And then there's the like reusing the components, like what things did you pay for in the Net Roadshow video that you can use in your ongoing marketing campaigns. And so I guess like what I would say to all the CMOs out there is to operate from like maybe a deeper level of confidence than like fear or anxiety or nervousness, because actually the skills that got you to your job now are the skills that are going to make you very successful in your IPO. And it's not actually secret voodoo land. Like, this was a very helpful presentation and I wish I'd known all of the pieces, but if you come back to your centering aspects of marketing, you'll be very successful in this launch too.
Well, with that, I want to thank both Carrie Lou and Whit. You guys are rock stars. Thank you so much for sharing like your insights, your thoughts, your tips, everything about it. Just incredible. So thank you so much. Christina, do you want to just say the final words here?
Yeah, sure. Thank you again, everyone, for joining today. We will send a recording. By the end of the day, you'll get a link with an email in your inbox, so keep a lookout for that. And we'll also include the slides. Thanks again. Have a wonderful day.
Take care, everyone.
Bye, everyone.